Hey everybody, Chuck Barone here. Tuesday, October the 31st, 2023. Happy Halloween, one of my favorite holidays. We'll have all the little kiddies coming to our house tonight for their trick-or-treats with their little costumes on. And I love the holiday, man. I love it with the little kids. It's fun. And, my house, luckily, a lot of houses don't get much traffic anymore. I guess it's nothing like it was when I was a kid. But it's nice to have the kids coming by and the holiday and all the fun that goes with it. Anyway, guys, before I get rolling, let me welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys watching these videos. We got a lot to talk about today. Pretty interesting day. We had a little bit of data come trickling in today. U.S. wages jumping pretty good. But now all eyes are on the Fed. We're waiting to see what happens tomorrow. The market now pretty much pricing in the Fed going to do nothing. They're going to meet, have a nice lunch and dinner together, and that's going to be that. But the markets today had a decent day. Another update for the stock market. I guess earnings are coming in okay for the most part. So the market just moving forward till they get some news that says stop. The Dow advancing today up 123 points, sitting at 33,052. The NASDAQ up 61 points, 12,851 for the NASDAQ. And the S&P, the broader market, up 26 points, 4,193. So decent day across the board for stocks. Nothing spectacular, but a good solid advance. Bond market was a little steadier today, especially on the longer term stuff. The 10-year coming in at 4.88% and unchanged from yesterday. Well, I guess it was up about 5 basis points. I think it was 4.875 yesterday. So basically sitting there unchanged, not much movement in the 10-year. The 2-year up 4 basis points. So a few of the shoving off a little bit of the short term, sitting at 5.09%. So that inversion narrowing out a little bit, but we'll see. I don't really know if the inversion really is meaning much anymore, because we've had this inversion for quite some time now, and we have not had the recession that typically follows an inversion. So we'll keep an eye on it. But bond market today a little bit calmer. The dollar today up. Japan leading the way. Japan kind of still tinkering around, but not doing much with their rates. So the dollar advancing up almost a point to sitting at 106.70 on the index. A really strong number for the dollar right now. It's almost too high, where it's making things difficult for our trading partners, but it is what it is, right? 106.70 on the dollar. As a result of a strong dollar, of course, precious metals go the other way when the dollar is stronger. So gold and silver retreating a little bit today. Gold down $12.10, sitting at $1,983.40 for an ounce of gold. Silver comes down 47 cents, sitting at $22.82 for an ounce of silver. I'm really liking silver here. I think you're going to see silver 25. And I think once it gets there, probably going to stay there for a little while. I think for sure we're going to see gold 2,000. No doubt. We'll see if it can hold it this time, hang on to the number. But precious metals, I think, are okay. Should be up. Obviously, if they were realistically priced, would be significantly higher. The world's still loving their fiat, and that's another whole topic. But tough day for metals today, with the dollar being extra strong. Oil. Down again today, down almost $1.96, down 96 cents today, $81.35 for a barrel of West Texas Intermediate. I've been telling you guys for a while, I think the trend in oil is down. I think it would be down probably another $10 a barrel right now if it weren't for this war in the Middle East and the threat of that war expanding. I don't think that, I'm going to talk about U.S. oil production a little bit later in the show, but OPEC has a lot of clout. But the rest of the world, some other countries producing oil, there's a lot out there right now, even with Saudi, Russia cuts. I think China buying a lot of oil off market from the Russians. So there's just not the gigantic demand there. I think oil comes down. Bitcoin today up $205. Last I looked, 34,618 for Bitcoin, holding its own. In spite of this trial, I know that all these different cryptos are different and everything, but it kind of all gets bunched together like stocks and bonds do. I think this trial, it looks like this guy's going to be toast, this Bankman-Fried guy. So we'll see what that does for the market. Maybe it actually causes a little bit of a rally in the market once they hang him, because they'll show the market's a serious market, not being run by a bunch of shysters like this guy, right? All right, let's talk about news today. The big news, U.S. wages jumping 1.1% just last month, higher than what they were expecting. The wages were up 1% last month, now 1.1% this month. Well, guys, guess what? Another sign that what I've been saying is probably right. This is just the sign the economy is too hot. Rates are not high enough to slow it down. Wages 1.1%, 1% last month. We can't have 12% wage gains. We can't, it's just, so anyway, Powell has his work cut out for him now. They're going to look at this. I'm sure they're going to get some data tomorrow before we do. But now what are they going to do, really? The market very much expects the Fed to stand pat tomorrow. They're not going to do anything. Like I said, they're going to have lunch, they're going to have dinner, they're going to have a couple drinks and bullshit, and then they're done. They're not going to raise rates. At least the market says there's a 96% probability they will not raise rates. So now basically the whole meeting and the whole idea of the Fed this week comes down to what Powell says at his presser, and if he now they're starting to learn his language a little bit, if he gives any forward guidance, and what it is if he does give any. I think that we'll have to see tomorrow. Powell's going to be moving, hinting. He gives these little hints, right? Is he going to be hinting at future hikes? Is he going to, use the line, the bond market's doing the Fed's work for it? It's going to be interesting. And the decision, I guess this one's kind of already baked in. They're not going to raise tomorrow. I would be raising for sure, because all of the data, even though it's not like moving up, like you're not seeing 9% inflation, okay? So it's not, oh my God. But when it goes from 3 to 3.7 and stays there, how much evidence do you need, right? Now, the Fed, as I've explained on the show a million times, the Fed feels like the hot jobs market is a big part of the problem. They feel like the hot jobs is contributing to these wage gains. Obviously, when there's more jobs than there are people, they get competitive for qualified people, and people get raises. They make more money, and that's not a terrible thing, right? It's just terrible for Wall Street because it affects earnings. Plus, people have more money to spend, so now that affects demand. Right? Anyway, these are pretty big wage gains now. So, what in the hell, Powell? I think the Fed they already feel like they've done enough to cause the recession that they want. Like I've said before, guys, a million times. The Fed raising interest rates doesn't do anything to bring inflation down. The Fed raising rates causing a recession. Now that will do something for inflation, because the recession will lower prices or slow the increase down because there's way less demand. So we knew this was coming. We know it's coming. We just don't know exactly when. But we know the Fed is going to engineer this recession. It's the only thing they got. But there's so many cross currents with the Treasury. Everything the Fed does now kind of hurt the U.S. Treasury, biggest debtor in the world, history. So it's just going to be fascinating to watch it all play out. Of course, tomorrow on the show, we'll be talking about Powell and what he said at the presser. If it's done by the time we get up here, usually we tape around 1:30 Pacific time. So we'll talk about that tomorrow, what we know, and we'll see probably into Thursday as well. Another quick thing I want to talk about today was this U.S. oil production, right? So, we have politics in this country, and the politics are what they are. I want to get into all that. I hate them all, as you know. But the United States, now leads the world in oil production at 13.2 million barrels per day. Yay, U.S. Now, the political class has kind of been pushing the idea that the U.S. has abandoned oil exploration, drilling for oil. A lot of people believe it's to be true. Well, here we go. Finally, we can put that to sleep. 13.2 million barrels per day. It's too bad, of course, that the oil is sold on the open world market and we don't get to keep all this oil right here in the U.S. It would be nice to, buy some oil, domestic oil at a discount to start putting back into that strategic petroleum reserve that Biden drained out, right? U.S. government gets no discount, even though they subsidize the oil industry pretty heavily with their tax policies and depreciation and all the other benefits oil companies get. So oil production up in the U.S. and continuing to go higher. And right now they're not really working those shale wells, at least not as much as they were. Fracking kind of getting a little bit of bad press, pretty bad for the environment. So oil production up. We'll see how long the U.S. can hold this, and we'll see what this extra production does to oil prices, which have been trickling down, right? And I was reading another article today off of oil now onto commercial real estate. As we know, commercial real estate's in deep trouble, guys. There's going to be a big collapse. It's coming soon. It's like watching an accident in slow motion. You're watching it and sooner or later the car is going to hit the tree. But it hasn't hit the tree yet, so you're just watching it skid until boom. That's kind of where we are with commercial real estate. It's going to cause a fantastic problem in this country because it's going to affect banks. Banks are the ones lending the money to these commercial properties. I was reading, they said, this research firm said the U.S. commercial property values could fall 40 to 50% by the end of 2025. Wow. So if you're an investor watching the show, probably going to be able to get a deal on commercial property if that's what you're into coming up here right now. And I'm telling you guys, residential properties are going to correct sooner or later as soon as there's a little bit of supply on the market. We have no supply artificially propping up residential real estate prices, and as they come down, what's going to happen is we got high prices, we got high rates. So if they start to lower rates, sometime next year maybe, 2025 maybe, now some buyers will be able to get into real estate who are kind of shut out right now because they can't afford the payments, they can't make it work. So they'll come rushing in, and that's just going to push prices even higher. But sooner or later, the rubber needs to hit the road. And, prices cannot go up vertically forever in real estate. We're already to a situation where people can't afford to buy a house. The premium from buying to renting is almost 50%. Your payment if you buy today is probably going to be about 50% higher than your payment's going to be if you rent today. So, there's just going to be, I don't know exactly how this real estate is going to play out, but there's a correction coming, and it's going to be a pretty steep one. We'll keep our eye on it. We'll talk about it as it develops. Anyway, guys, that's it for the day. I've been yakking. We appreciate your support. Happy Halloween this evening. Get out there, party, do your witches, do your vampires, man. Enjoy yourselves. We'll be back tomorrow to bring you guys the news you need. Until then, guys, take care. Thanks.